European stock markets have kicked off the new year with a bang. The UK's FTSE 100 index is up around by 1.2%, while the EUROSTOXX 50 index is higher by 1.5%. In the currency markets, the euro is much firmer against the dollar. It hit around about 133 earlier in the session. It is moving off that a little bit, back down to 132, but nonetheless very strong against the weak dollar. And in the peripheral bond markets, both Spanish and Italian bond yields are easing quite significantly. Good morning, Happy New Year, and welcome back to another Daily Market Bite with me, Ishaq, Siddiqi. I'm going to give you a quick rundown of what's going on. We've kicked off the new year on a very positive tone. And now that's basically on the back of some encouraging news out of the US, which we've all been waiting for. US lawmakers finally come together to find some common ground to whack out a deal to avert the immediate fiscal cliff. This deal contains a number of tax hikes for the rich and tax cuts for the poor. However, the big however is that it doesn't address the full fiscal cliff. It's not a comprehensive plan. It's not the grand bargain that markets were hoping for. Now, the big unresolved issue is the spending cuts, large number of spending cuts that US lawmakers will now have to reconvene, meet during the month of January and in February to come to a resolution and find a common ground. This one will be a bit more toxic given the fact that there's such a large discord between Republicans and Democrats on spending cuts, where President Obama is quite adamant that he doesn't want to see a large amount of spending cuts, where the Republicans think that that's one of the only ways that the US economy can recover. Now, given that this issue is such a big question mark for markets as to who's going to win this battle, and on top of that, the fact that the deadline for the debt ceiling is also in February, these two combined have a lot of potential to unnerve markets in the first quarter of 2013. So, as we kicked off the new year, although it's pretty bullish across the board, most of that response is on the back of the fact that we retreated quite significantly in the final days of 2012, given the fact that US lawmakers were playing a game of brinkmanship and waiting for the last minute to pull out a deal. We're mostly seeing value hunters creeping into the market and picking up stocks that are looking quite cheap at the moment. So this bullish momentum is probably not going to last for long. Enjoy it while it lasts. We may see a bit of negativity seep into the market sometime soon, perhaps as early as next week, as US lawmakers are going to reconvene and start talking about some of the bigger issues and try to come up with a deal to avert the full effect of the fiscal cliff. So there's a big threat that still remains to the US economy. Now, going aside from that issue, we've had data out from China overnight which show the manufacturing sector in China is continuing to gain pace, a very positive result, and has restored a bit of confidence around China, and goes into the strong data out from the emerging growth market. Asia is picking up quite significantly, which is a very positive development on the whole. However, today we've also seen some pretty weak Eurozone manufacturing PMIs. It's a bit of a reminder that Eurozone is still struggling, and that's going to be a big theme for the first quarter, for the first half of 2013. Now, going into what we got for the rest of the session, we have some US ISM manufacturing data, and we also have construction spending data, which will be eagerly awaited. However, we do expect US markets to open in a very upbeat manner, following on from strong sessions in Europe and in Asia, on the back of the fact that, for now, things are in the clear for the US economy. However, we're going to see that all flare up sometime soon. Thanks for watching your Daily Market Bite. Tune in for another one tomorrow.